What if I told you that buying real estate isn't always the smartest investment? In fact, over the last few decades, millions of ordinary investors quietly became wealthy by doing something much simpler: investing in index funds. So, if you had $100,000 today, where should you put it? A rental property or an index fund? Let's do the real math. Meet Alex. Alex has saved $100,000 after years of hard work. He has two options. Option 1. Use the money as a down payment on a rental property. Option 2. Invest the entire amount into a low-cost index fund and simply let it grow. Almost everyone tells Alex, buy real estate, because that's what successful people do, right? But investing isn't about opinions. It's about numbers. So let's compare both investments over the next 20 years. First, real estate. Alex buys a $500,000 rental property. He puts down $100,000 and borrows the remaining $400,000 from the bank. At first, everything looks amazing. Rent starts coming in every month. But then, reality hits. Property taxes, insurance, maintenance, repairs, vacancies, management fees, unexpected expenses. Suddenly, that passive income doesn't feel very passive anymore. Now let's look at the other option. Instead of buying a house, Alex simply invests his $100,000 into a low-cost S&P 500 index fund. He doesn't fix broken pipes. He doesn't answer tenant phone calls. He doesn't negotiate with contractors. He simply buys and holds. Historically, the S&P 500 has returned around 10% per year on average over the long term. Of course, some years are down, some years are up, but over decades, the trend has been remarkably strong. Now here's where compound interest becomes powerful. After 20 years, that $100,000 invested at an average annual return of 10% grows to roughly $673,000. Without lifting a finger. No tenants, no repairs, no maintenance. Now let's compare that with real estate. Yes, property values may increase, and rental income helps too. But mortgage interest, taxes, insurance, maintenance, vacancies, and selling costs can reduce your overall return significantly. And remember, real estate isn't very liquid. Selling a house can take weeks, or even months. An index fund? You can sell it in seconds during market hours. Another advantage, diversification. Buying one house means you're betting on one neighborhood, one market, one property. Buying an index fund means owning small pieces of hundreds of the world's biggest companies. If one company struggles, others can continue growing. That reduces risk over time. So, does that mean real estate is a bad investment? Not at all. Real estate can build wealth, especially if you enjoy managing properties. Use leverage wisely and buy at the right price. But if your goal is simple, low-maintenance, long-term wealth, index funds are incredibly hard to beat. Because investing isn't about looking rich. It's about becoming rich. The best investment is the one you can stick with for decades. So, if you had $100,000 today, which would you choose? An index fund or real estate? Let me know in the comments. And if you enjoy simple finance explained with real math, subscribe for more.